Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the company world even when things get a little messy. Today we're diving into a filing from ODP Corp, and let's just say there is a bit of a drama unfolding behind the scenes with their potential sale. Before we dive in, make sure you hit that subscribe button if you want more of these deep dives into corporate filings. And hey, we've got a fantastic community over on Discord where we break down these documents even further. So check out the link in the description below. Alright, so ODP Corp, you might know them as the parent company of Office Depot and Office Max, has filed this report. The big story here is about a potential merger, a plan to be bought out. This usually involves a lot of paperwork and official announcements, and sometimes, as we see here, it also involves angry shareholders. This is what is called a Form 8K filing. Think of it as a special announcement that companies have to make when something really important happens that the public needs to know about right away. In this case, the important thing is a deal that was made back in September to sell the company to a group called ACR Ocean Resources, LLC, which is backed by investment funds managed by Atlas Holdings, LLC. This is a pretty standard move when a company is being acquired. So, the company is officially called the ODP Corporation, and they're incorporated in Delaware. Their stock trades on the NASDAQ under the ticker symbol ODP. You can see here that back in late October, they filed a formal statement to their shareholders about this merger. This is where they explain everything shareholders need to know to vote on the deal. Now, here is a key piece about their stock. Their common stock, which has a par value of $0.01 per S-share, is traded on the NASDAQ Global Select Market. This is the main marketplace where people buy and sell shares of ODP. This section is where things get interesting. After they sent out that official shareholder statement, a couple of lawsuits popped up. Apparently, some shareholders weren't too happy with the information they received. 2 complaints were filed in New York, alleging that the shareholder statement, the one meant to explain the merger, was missing important information and was misleading. These lawsuits, they're basically claiming that the company and its board of directors didn't tell the whole story about the merger. They're asking a judge to stop the merger until the company gives shareholders all the correct and complete information. They're also asking for money, like damages, if the merger goes through anyway. On top of these lawsuits, several other shareholders sent letters with similar complaints about missing information. Now, ODP Corp says they disagree. They are strongly stating that their shareholder statement was not missing anything important, and that these new disclosures aren't even necessary. They believe these complaints are baseless. However, just to avoid the hassle and cost of fighting these lawsuits, they're adding some extra information to their shareholder statement. This is a classic move to try and get past these kinds of legal hurdles without admitting any fault. They call it supplemental disclosures. So what did they add? First, they clarified details about confidentiality agreements with potential buyers back in late 2024. They're adding a sentence that says, and I am paraphrasing here, that even if there were rules against talking about a deal, those rules didn't stop potential buyers from privately asking for changes to those rules. They also added that no formal offers or prices were discussed at that early stage. This is likely to counter any claims that bidders were unfairly constrained, or that early talks were more serious than presented. Next, they've added more details about how one of their financial advisors, JP Morgan, analyzed the company's worth. This involves a discounted cash flow analysis. Basically, JP Morgan looked at how much money they thought ODP would make in the future, discounted those future earnings back to today's value, and came up with a price range. They've now clarified the range of terminal values JP Morgan considered, which was between $567 million and $774 million. This is basically the estimated value of the company at the end of the projection period. They've also clarified the discount rates used, which essentially reflect how risky it is to invest in ODP given current market conditions and the company's own financial health. They've added that these rates were chosen using a standard financial model and JP Morgan's expertise. They've also specified the company's net debt, meaning how much money they owe minus how much cash they have, was $68 million as of June 2025. This is probably the most important part of the financial advisor's update. The analysis suggested that ODP's stock value could be anywhere from $23.25 to $29.75 per S-share. They're highlighting that this range includes the proposed merger price of $28 per share and was higher than the stock's trading price of $20.82 just before the announcement. This detail is likely intended to show that the deal is fair and offers a good price to shareholders. They also note that this analysis was based on a maximum of 33.5 million fully diluted shares outstanding as provided by ODP's management. Now, like most major corporate filings, this report includes a section on forward-looking statements. This is basically a legal shield. The company is saying that anything they say about the future, like their plans or expectations, might not actually happen. They're warning investors not to rely too much on these statements because actual results could be very different due to various risks and uncertainties. They list a whole bunch of potential problems, like whether the merger will actually go through, if it will be more expensive than expected, or if the company's business will be disrupted by this whole process. This part is about where people can find more official documents. They're telling investors to read the full proxy statement and other filings with the Securities and Exchange Commission, or SEC. They provide a link to the CS website, and mention they will also offer copies directly from their investor relations department. This is standard practice for transparency in mergers. Here, they're identifying who might be trying to influence shareholders' votes on the merger. This includes the company's directors and top executives. They're saying that information about these individuals, including how many shares they own, is available in the proxy statement and other filings. This is to ensure that shareholders know who is advocating for what, and if they have any personal interest in the deal. And that brings us to the end of the filing, signed off by Sarah E. Lavinka, who is the Executive Vice President, Chief Legal Officer, and Corporate Secretary. This signature officially puts the company on record with this report. So, what is the story here for ODP Corp? It looks like a fairly typical merger situation where after announcing a deal and providing details to shareholders, some shareholders decide to sue. They claim the company isn't being fully transparent. ODP Corp, while denying any wrongdoing, is adding extra details to try and resolve these issues without a prolonged legal battle. So the merger can proceed. The updated financial advisor information is especially important as it helps justify the merger price by showing how the company was valued. The key risk seems to be legal challenges and potential disruptions to the deal. From a Warren Buffett perspective, you look at the underlying business ODP, the office supply giant, has faced significant headwinds from online retail and changing work habits. The fact that they're being acquired suggests that perhaps they see this as the best path forward, either to unlock value for shareholders or to avoid further competitive pressures. The price of $28 per S-share seems reasonable compared to the stock's prior trading price. But the real question is whether the deal will close smoothly and if the acquirer sees long-term value. The legal challenges, while perhaps designed to extract concessions, could also introduce uncertainty and delay. Alright, that is our breakdown of ODP Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the merger will go through smoothly? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.